Hello, this is GBP USD weekly forecast for this week. What I'm looking for here on the chart is the monthly time frame, whereby you can see that we took some liquidity here. The first break of structure, then we mitigated this goalkeeper. So in the long run, we're anticipating to take these higher highs. After mitigating this goalkeeper, we can see a bigger displacement, leaving an FVG on the monthly, giving us a sign that this market is strong, has a strong bullish momentum with this gap here. And the way we see how the next candle after formation of this gap was formed, we see at the top of this week, we had the market close on the monthly below that week. This gives us a sign that this market is likely, we can say 70%, is likely going to fill this FVG first before we can rally up for these higher highs. Yeah, that is a new concept that I learned somewhere, that 70%, when you see the market closing below the highest point of the candle that formed an FVG, yeah, below it, the market will likely refill this FVG first before we run for the liquidity, for the external liquidity lying above there. So we are now trying to look for internal liquidity in form of this monthly FVG that is on the monthly time frame. Now dropping down on the lower time frame, we can see here now we are on the weekly time frame. On the weekly time frame, we can see that there was some liquidity taken over there on the monthly. You can go check. We see liquidity taken here, right? See liquidity taken here. All of last week, all of the for the previous how many weeks? 1, 2, 3, 4, 5, 6, around 6-7 weeks. The market has been moving like up and down. Something like people say it's consolidation, but for me, it's a good time to take in my entries using my model, because the pattern prints are so clearly. We can see on the weekly that I think previously I did an analysis, and focus was to take these higher highs because of the stronger rejections. That's why I can now strongly make this point that while taking entries, sometimes candlesticks don't give a clear picture of what the market is doing. You see some of this rejection, there are a lot of rejections here, and you can see the market moving down, right? So what my logic was, we had a liquidity swept here, the first break of structure, and then this lower low we should target for this high highs. But going back on the monthly, as just shown that the FVG that was formed, the next candle that formed that FVG closed below that week. So we'll likely fill this FVG first before we can try to rally up for the external liquidities lying up there, here and up there. So here on the weekly, you can see inside the monthly FVG, we have this weekly FVG. Yeah, if the market will come and fill this FVG and try to refill it, we will anticipate it to react off of this weekly FVG before we rally up. Yeah, so we are targeting for these liquidities on the weekly. Let's drop down and see what's up. On the daily time frame, This is what happened last week, exactly following the bearish version of the standard trading model, which indicated that we need first a sweep of liquidity, which we had there, somewhere there, which that first break of structure, then this higher high, this is where you take your entry to potentially smash these lower lows. We can see we had our first break of structure around here, then this higher high is where you set our order, and you can see this lower low was smashed perfectly. And also at the sweep of this liquidity, we had the first break of structure around here, then it's higher high right here. This is where you set your order, stop loss about this guy, and you can see the market is going to smash this lower low, right? Did we smash, or we are almost smashing it? Yeah, there was a lot of nonsense going on here. Yeah, the last month, which on the lower time frame is very clear, the pattern just printing, but in a slow pace. Let me go back and check on something here. You can see how the market opened on this weekly. There was a stronger displacement on the lowards, a gap, right? The market gap downwards. This is a sign that this market is stronger, has a stronger bearish momentum. So we will be targets. We will be anticipating for this lower lows to be taken. Yeah, for this FVG to be refilled. Dropping down on the 4-hour time frame, we can see this was just what was happening yesterday. Yeah, the last week, we had a liquidity swept here. We smashed this guy, and we had here, set your order here. After this sweep of liquidity, you could also set your order here, and your stop loss you find above here to smash this lower lows. This is it. There's just a clear picture of it. And what we can see here is that considering the previous video analysis I made, I was considering this first break of structure, right, to be taken, which was eventually taken here, and the next potential target was this high, right? So, and I made it clear that liquidity right here acts as defenders, and the market usually after overpowering the defenders, we get a goalkeeper right here on the goalpost, which the market is likely to react on it and move in the direction we are predicting. So before we can get to this monthly FVG, I would really love to see the market reacting off of this goalkeeper, maybe a small bit of it to some top there, yeah. Or we can even go sweep these highs. See, anything can happen, or we can just react a bit and go fill this FVG before we can rally up. That is my prediction for this week. So we'll be waiting for the market to reach this area to see some reaction of it, but generally I'm bearish now, and till this place, this goalkeeper, I'm waiting for the reaction, see how the market is reacting before I can jump on using the standard trading model. That is it. That's what I had for this market this week. Thank you so much, and if you've been watching, you can like the video, share, comment. Thank you so much, and take care. Bye.